Welcome students to this lesson's video. Now that we have discovered and started to really understand what decisional and extreme order blocks are, now we're going to refer to a specific type of decisional. So as you've now learned in the previous video, there are three types of decisionals. We have our type 1, which lies within structure. We have our type 2 decisional that lies after the main structure but still internally. And then we have our third type of decisional, which is an order block that separates two imbalances that has purpose on the lower time frame. In this video specifically, we're going to be talking about the notorious D2S and S2D decisional order blocks. Now, in the previous section, we talked about continuation and partially reversal order blocks. However, those order blocks, which we mentioned for the continuations, are the best ones to use for continuations. As far as reversals, these are the specific type of reversal decisional order blocks that you want to pay attention to, as they are far more accurate, they're far more probable, and you are going to receive a lot of clarity in this video when it pertains to the reversal decisional order blocks. So let's go ahead and get right into it. D2S and S2D decisional order blocks. Lesson overview. In this lesson, you guys can expect to learn all about D2S and S2D decisionals, exactly what they are, and why we use them as the best decisional reversal order blocks in our trading plan. One of the only and best decisionals that I will ever use, as I have my own specific trading style, combining these concepts that you guys will be exposed to later on in the section. You're going to know exactly where they're located in multi-time frame structure. If you guys have now learned, especially going to this charts and start to practice, these concepts, these order blocks, it's not like there's one right time frame that they're always going to be on. The time frame is always going to differ. So knowing how to absolutely locate them within multi-time frame complex structure is essential. Additionally, you're going to be learning how to properly apply them through the multi-time frame structural analysis that leads to some of our highest quality reversal trades. As we've talked about, the trend is your friend, and you want to follow the higher time frame trend. But these higher time frame trends start in the lower time frame. So when you know how to properly navigate structure, when you're becoming a beast at understanding the main, the internal, the sub-internal, fractal structure of the market, that's what's going to enable you to identify the best order block. So structure comes first, but specifically D2S and S2D decisionals, because they are counter trend, as you're going to be learning about for reversal trades, you really want to pay attention to a lot of notes in this video. You're going to be learning when to use them for the highest probability, right? You're not only where, but when. There's specific times, specific places that you are supposed to be focusing on these order blocks. And if you don't, they won't work out and you're just going to end up on the wrong side of the market. And of course, as I have now mentioned through these previous points, alluding that the S2D and D2S decisional order blocks, they are the best decisionals to use. And the classification of highest probability decisionals, they oftentimes will work more often than extremes in reversal scenarios. Now, as you continue to go on throughout this course, because we're still in the first section, right now, we're just simply trying to understand what these specific concepts are, right? The order block, structure, so on and so forth, right? But for us to put everything in one video, it will be exceptionally confusing because there's going to be so many concepts that we're tying in. So when you learn why they're going to be more valid than extremes, part of that will be covered in this video from a fundamental standpoint, but the advanced and the complex understanding will be covered later on. With that being said, let's go ahead and get right into it. So D2S and S2D order blocks. What exactly are they? D2S and S2D decisionals refer to demand to supply and supply to demand order blocks. They're specifically the last area that was in a trending phase, that last order block that failed to continue structure and caused price to have a small pullback and then break that structure and continue to reverse the trend in the opposite direction. So they're meaningful areas of price action that we need to look for, as they serve a very important purpose. They didn't continue the initial trend that price was supposed to resume. Rather, they're an area of a decisional point where price decided to not continue structure and to actually have a pullback from a previous order block, a previous supply or demand, in order to then cause price to break structure in the opposite direction. So let's take a deeper look at this. What are they and where do they occur in structure? D2S and S2D decisionals only occur in reversal trends after a BOS. Critical, write that down. If they do not cause a new structural shift, they are simply not D2S or S2D decisionals, as you're going to see here in a few points below. Additionally, is they must be relevant to the time frame you analyze them on. You're going to see once I pull up these diagrams what I'm referencing into that. Specifically, if we go ahead and pull up a picture of our D2S decisional, our demand to supply, notice starting to the left, we had some previous bullish structure. We had higher high, higher low, higher high. This higher low that made our current higher high, as soon as it was broken, what ended up happening prior to that? Well, if you see, at this moment in time, we were previously in an uptrend. So when we're in an uptrend and we identify our demand, our extreme demand order block, we're going to expect price to then just continue higher from here. But if you notice, we had a small reaction, and I illustrated this movement with an X. Instead of this higher low order block demand being mitigated to make a new high, it rather just had a quick reaction, a small pullback, and then price ended up actually breaking the bullish structure to then go to bearish structure. So this is what we call a demand to supply order block decisional, because we know that the first impulse within structure, that is going to be the catalyst or the result of an extreme order block. After we have a pullback, that then causes the second impulse within our structure. That is known as our decisional order block that causes that impulse. Specifically, what we need to pay attention to is this failed demand, right? This is considered failed because it didn't make a higher high. This failed demand had a small turning point and acted as a deciding point. Was it going to continue the bullish structure, or was it going to break it and ended up breaking it? So this is what we call a demand to supply, where a previous failed mitigation of a demand that you're going to illustrate and mark out, if it causes a small pullback and then price breaks that overall structure, that new point that breaks the structure within our second impulse after mitigating the demand is what we call the demand conversion into supply. The D2S, demand, has now converted into ample supply. That is a very, very high probability area for us to be looking for reversal trades, right? So after the structure breaks and we see this pullback from the mitigation of the demand, and then price breaks and makes a new low, our new structure point is from this high to this low. So this is our whole trading range. And when you're thinking about logic and building a narrative, this point has some purpose, it has some intention. What is the reason? The reason is to make everyone believe who are looking for buys to be getting into this extreme order block right here to make higher highs, wanting everyone to believe that, and then price drastically break structure. So this becomes a very meaningful area that we always want to look for whenever we see a BOS. Now, with that being in mind, when you see this, you're almost going to think from the perspective of the previous video, a type 1 decisional. A type 1 decisional, remember, is that order block, that decisional order block that occurs from the internal, right? It's that first internal pullback that actually causes structure to break. But key point, only continuation structure, only continuation structure. If you were to see this and you had a lower high, lower low, lower high, lower low, and you see a pullback happen from this previous lower low, that is not a D2S. Your setup must look like this. It must be in a previous uptrend with a failed mitigation of the demand, and then price ends up breaking it. If it is in a downtrend, it will not work. That is not a D2S. That is simply just a type 1 decisional. Just to clarify, that little minute difference will make a whole difference in your approach, right? As I've mentioned now, these are the highest probability decisional order blocks for reversals, and some of the highest probability order blocks for reversals in general, even oftentimes being more probable than extremes. The nature of this is because after price creates that BOS, oftentimes what price will do is just to come back, make a quick mitigation of that demand to supply, this D2S order block, and then continue to go lower. What I was trying to emphasize on the second point is it must be relevant to the time frame you're analyzing. If this is all a 5-minute, 15, 30, 4 hours, doesn't matter. If this is your 4-hour order block or 4-hour structure, you identify this 4-hour order block, that is completely valid. But let's say maybe, this is all 5-hour, 10-hour structure, and you're only focused maybe on here on the 5-minute. Oh, here we go. Here's our high, higher low, higher high, higher low, higher high. Price just breaks. This is not a D2S because that is just on the 5-minute. You always need to zoom out to the higher time frame, and that's a skill set within itself covered in a later video about how to be agile and adaptable through multi-time frames. Okay, so let's get into the next one, right? D2S, it was in a previous uptrend. Price then breaks bearish after mitigating a failed demand, and then price then continues that new bearish structure. On the other hand, we have our S2D decisional. S2D decisional. So on the contrary, you could expect it to be inverted. For an S2D decisional, we are in a previous bearish downtrend. What happens at this point in time is we have a high, a low, a lower high, and a lower low. We see that price breaks the previous low, makes a new lower high, lower low, and then based off of our structure that we have to this point, and we find our extreme supply, again, your failed demand, your failed supply, they will always be extreme order blocks. Once you identify your extreme order block, and let's say you were expecting price to then make new lower lows. In this instance, you notice it did not. So what happens is price will come up to mitigate your supply, but what will happen is this point that mitigates the supply, it'll fail to make a new lower low. Hence having a lot of intent and logic for price to come back to this area after it breaks structure. So we see that previous supply that was mitigated, failed to make a new lower low. It mitigated, caused a decisional pullback in order to then cause a new impulse. This is that S2D decisional supply has now been converted into demand. After price fails that making new lower low, then it breaks structure. That is, again, our second internal push. That price will come back to mitigate with a very high degree of logic. And then after the fact, it'll come back to it and then continue to make new bullish structure. Now, there are several points going into here that we need to address, but that's going to be saved primarily for the key takeaways. One of which I will go ahead and emphasize now is if your S2D or your D2S has a quick mitigation and price continues lower, always know that price, as much as we would want it just to keep selling all the way down, it doesn't have to. What can happen is all it has to do is after it makes a new lower low, price then can actually come all the way back up to the extreme if it chooses to, and then it will make the absolute lower low. So just be mindful that when price makes a D2S mitigation, never always assume that price will then just continue selling all the way off. And when we go on throughout the course, you'll know when and why that happens exactly. But just as a precursor, never expect that this is the end all be all, because it will end up being a great trade, but it could actually end up coming back to our previous extreme to then make the absolute new structure. So let's move on. Now let's get to the applied understanding of our S2D decisional. Let's see what it looks like on the charts. in this example, the first thing we always need to do is identify our structure, bearish, bullish, right? So if we see over here, we have a lower low, a lower high, that makes a lower low all the way over here, right? Lower low. At this point in time, we are looking for a bearish continuation. So we want to identify our extreme order block based on these previous cells. If we look to the left, where's our extreme order block, right? This is our structure. We notice that our extreme order block is, in fact, this gray or the darker gray bearish candle, because this is the candle with imbalance, right? And that's the candle with imbalance that causes price to go lower, our extreme order block. So we identify now our potential extreme supply. And if we notice, what does price do? It comes back up into it. And where does price actually start to stall once mitigating that supply? Well, right over here, if we see, this is where it was first mitigated. Price came up into it. Do you notice how we just started kind of making some form of decisional area? You know, we had a pull up to it, price started just chopping back and forth, and then it broke the structure sufficiently. After that structure is broken and we see a BOS, always identify where the previous bearish extreme was, identify the order block that mitigated it last, of course, with imbalance, which is right here. There's no other imbalances in here, and cause that major push to occur. After you have identified that, then all you have to do is wait for price to come back to now our previous failed supply, to now our new current demand, S2D. Once it comes back to here, then you can expect new bullish structure to continue. Specifically, this becomes very simple when you know how to properly identify order blocks. If you notice from this low to this new high, where are the two areas of impulse and where are the first two imbalances? In this case, from this low to our new high that broke structure, do we see any imbalance down here? Nope, nope, yes. This is our first imbalance right here with our order block, this white candle. That is going to be our extreme. After we see that as our first push, where does the second push come? Well, we see this is the first one. We see price start to stall, make some form of accumulation internally to break our structure. And where's the last impulse, the last imbalance? We see it right here. Second imbalance, this is what caused the new expansion. So that's our decisional, and specifically our supply converted now into demand, decisional. Great. So it becomes very simple, but just always know that order blocks always have the same anatomy, but the location, the relevance will be different based on if it's an extreme or decisional. Now let's look at our D2S, the inverse of the S2D. So where we started with the bearish trend for S2D, for a D2S, we need to have a bullish trend. And that first letter tells you what trend you need to have. If you're looking for a demand to supply, you're going to be in an uptrend. S2D starts with a downtrend. This example, what we can see is we have our higher low that makes our higher high. So this is our bullish structural range from here. And we are looking for our extreme order block at our higher low that makes our higher high. Now, while you can't see it on this time frame, this is our 5-minute perspective. Obviously, I didn't put that, the lower time frame all inclusive because it wouldn't fit on the page, but this is our 1-minute order block extreme. Based off of this and our bullish structure, you would typically assume that once price comes to mitigate our extreme, after it's mitigated, price will then make new higher highs. Well, what happens is after we have that previous uptrend, price comes to then mitigate that higher low extreme to make potentially the higher high. It'll give a small pullback, and then after that pullback is made efficient, notice what happens. Price then breaks structure after that, right? So as I'm going through this, make sure you can pause the video and you can look at your notes so you know exactly what I'm referring to. And now we have to ask ourselves, right? After we see that this demand that failed to make a new higher high caused a pullback and then the next impulse, where's our decisional order block? Well, like I always say, we always want to talk about decisional and extremes. And if you see where's the imbalance, there is no imbalance, is none, is already mitigated. Everything else is already mitigated, right? So our extreme in this instance is our extreme order block right here. This is our extreme. It's not all the way up here because everything else has been mitigated. It's all efficient. Order blocks need to have imbalances. So this is our extreme right here. So now what we can say is because all of this is already efficient, there's no imbalances. Where are the two impulses? The first major impulse, we have the pullback, which is a result of our failed demand. And then we have our second impulse. So here's our extreme, and where's our decisional after the structure breaks, which you can only identify after the structure breaks, of course, is this order block right here, this white order block, right? Especially because they closed the previous imbalance. That's our decisional. So remember, this is a D2S decisional because that was our decisional pullback that caused structure to break impulsively. Price then returns back to this meaningful area for the reversal, and notice what happens afterwards, just absolutely sells all the way down. And this is what we typically want to expect, and hopefully you can now see by these two brief applied understanding examples, as soon as price comes to mitigate an S2D or D2S decisional, there will typically be a drastic move that happens afterwards. And the purpose of that is in order for price to, it's trying to go to a higher time frame. It's trying to fulfill a higher time frame objective. So it's going to impulsively get there after we have a BOS, for the reversal. So this is our applied understanding of the concepts. Now let's go into the initial application. So now we're going to head to TradingView and see how we can apply exactly what we just learned in the very and most efficient way. So as I was mentioning on the previous, we have our demand to supply. If you see here, we have a higher low, higher high, higher low. We also have our higher high up here. So we are looking at current bullish structure, and we're looking to buy at this moment in time. And while we're looking to buy, we need to keep in mind that we are only going to be looking for buys until the structure breaks. So with that being said, we have a 1 minute order block within here. Based off of our bullish structure, you would typically assume that you're going to have some form of mitigation to go higher, right? So in this instance, that's mitigation occurred all the way over here. Now, when that mitigation happens, you would assume that price is going to make new highs. The demand is mitigated, but it's failed because it did not make new structure. And this is where you have probably realized yourself that when you're identifying structure, or rather identifying order blocks, maybe you were so confident in it, or you identified your order block and it gave you a reaction. You're like, I know it's gonna go higher. I know it's gonna make higher highs. Well, what will end up happening is quite the opposite. It'll give a reaction, which makes you want to psychologically put on more positions because you're very confident in it, but you're failing to understand that it doesn't have to make new highs. All valid order blocks will give you a reaction, but not all order blocks will give you that follow through to make new structure. Only one will. And in this instance, the order block did not make new structure. So we know after it made the pullback, then break a new low, this was in fact going to be a D2S order block, right? So again, another very important point to note is when you have and identify your D2S, as we talked about per the diagram, when you notice that structure starts to shift like this, oftentimes after this BOS happens, we know that this is going to be our new structure points. But as we talked about in the first video, there is multi-time frame structure, within structure, right? So if this is our main structure, we're going to have some form of internal structure. So again, this right here would be our 15-minute structural range. But within our 15-minute, we also are going to have 3-minute internal structure, as you can see with these dots. And these dots I'm trying to represent over here in the form of the lines, the internal structure within the main leg. The whole point I'm getting at with this is when you see this D2S, this failed demand that then breaks structure, it's two things. One of which it is going to be that decisional of your higher time frame range, but also it will actually be your extreme for your internal range. If you look here, you have your internal low, internal lower high, then your lower low. You have this range, right? So this is actually an extreme of your internal range to go lower. Internal low, internal lower high, internal lower low and lower high, right? Price comes then back up to here to then go lower. So it's that double confirmation. We still call it a D2S, but just know with a very, with confidence that if your D2S order block right here, if that aligns with your lower time frame extreme range, and it is within your higher time frame, that second meaningful push, 1 and 2, that's all the confidence you need to have very high confidence that that's going to be a winning setup and a very high probability trade. Now let's take a look at our supply to demand order block. Supply and demand order block, as we mentioned, is it's the inverse. So looking from left to right, we have lower low, lower high, lower low, lower high, lower low. At this moment in time, where is our valid order block? Again, there is no imbalance up here. This is the only imbalance within this range. So our order block is actually going to be right here. This is our valid supply order block, right? After we've identified our valid supply order block, based on structure, you would assume lower high, lower low. You would assume that price would come to mitigate the supply and then make a new lower low. In this instance, we can clearly see that didn't happen. But notice what did happen. This supply, we can see price, what it do? It came up into it and it had a rejection from it. That means this is our decisional area. That's our decisional area. It mitigated the supply, failed to make a new lower low, and then price impulsively went up from there. Okay, so this is our supply to demand, or our D2S order block, because what we can clearly see after the fact is price mitigated it, had a pullback, and then it broke through, right? That all being said and considered, this is our supply to demand. And after price then makes new structure, what does it do? Well, we can first talk about over here. It makes new structure, it comes back, and it actually mitigates it. You see that it's mitigated right here. After it's mitigated, we then see price makes new structure, which, great, a winning trade. But something that you're going to get from our key takeaways is that sometimes an order block can be mitigated twice, irrespective of the time frame you're looking at. This is our 1 hour, this S2D order block, for instance. It was mitigated, but then price came back in. Why is that? Well, on a basic level, we need to understand that whenever you identify order blocks, you want to identify two things. One is the absolute largest order block that is present. In this case, this was the highest time frame, the 1 hour where we saw a D2S. And you need to know that all price needs to do is just tap it. It can just tap it, run away, it can come inside, or come all the way down within. But in this instance, it just mitigated the high of the order block, and then it ran up. But then it ended up coming down deeper into the order block for a double mitigation. Why is that? The reason this happens is because you have order blocks within order blocks, as you're going to be learning about in the next few lessons. But with that being said, the 1 hour is the only one that needs to be mitigated. So that tells us that somewhere within our 1 hour, there was actually another lower time frame refined order block, such as the 15-minute. The 15-minute could have lied all within here, the extreme range or the extreme of our decisional order block. But just know for right now, for this video, that order block was mitigated, the 1 hour was mitigated, and then of course it then continues to make new structure after. And if you're asking, which I know some of you most likely are, well, why didn't you identify this high that made a new high, then this new higher low, and then this new higher high? And then you see this BOS. That is what you are going to be learning after the next few lessons and sections. This is where it comes to all things based on not structure, because structure is not king, but you need to know how efficiently mark structure to know why all of this happens. So put that on pause, make a note if you're a little confused about that, because that will be addressed later on in, again, the mastermind course. So this is how we need to view our D2S and S2D decisionals, having a reaction from the supply to then break the structure. Price will then come back into it and then take off. It can just mitigate. It doesn't have to go all the way down to a 15-minute. It can just mitigate your higher time frame and run away. And that's why we have our edge in knowing the only order block that will ever be mitigated, as I am going to continue to say throughout all the order block lessons, is the highest time frame. When you see an order block, always zoom out to make sure there's not a larger one in the same area you're identifying. With that being said, let's go back to the presentation and see our key takeaways. Our key takeaways: 1, D2S and S2D decisionals are the highest probability reversal order blocks. As you can see, when price mitigates these, they will oftentimes just run away. But as we've also noticed, they can come back and mitigate later than expected. You know, what we can expect is maybe, we have an order block that's mitigated and it missed our D2S. Do not worry. If that happens, that's just further confirmation that later on our D2S will still come back to get mitigated. So don't chase a trade that, you feel like, oh, I identified the wrong order block. You're going to realize once you continue to have the experience and practice, your order blocks are going to be very consistent all the time. And you're going to have to start to have patience and understanding that your order block will work, but it doesn't always have to work when you want it to. It can happen later than expected. Our favorite key takeaway: always identify the largest OB. In the previous example, it was the 1 hour. But what happens is it actually came to a lower time frame refinement within our 1 hour order block. We didn't scale in to that order block to show you because that's a video that we have not covered yet. But just know that if price mitigates any order block for that matter, not just D2S or S2D, extremes, all decisionals, whenever an order block is mitigated, just know that price always has the opportunity to come back into a deeper mitigation within the order block and then, continue structure. But you'll know exactly how to understand when and why that happens later on. Do you have a short-term reaction? Go to the extreme for the move. We also talked about that when price has that mitigation, what can happen is if our D2S is here, it comes to mitigate and go higher, it can then come back down to our initial extreme. That's always a possibility. So never be married to the bias that D2S or S2Ds will always make new structure, because they are, as probable as they are, they don't always have to work. And there's reasons for the next section. The difference between Ds and type 1 is they only occur in reversal trends. D2S and S2Ds must cause new structure to break. If you're in a previous downtrend, price mitigates that previous bearish extreme, has a pullback, then makes new bullish structure. That is, my friends, an S2D decisional, supply to demand. If you do not see that new structure of BOS is made and just a new higher, new higher low is made, that is just a type 1. Very, very, very important. With that being said, everybody, that is the end of this video about D2S and S2D videos, or S2D and D2S order blocks. I hope you guys had some key takeaways. I know this might be a new concept to many people, but fret not. We're going to be having a lot of practice with these concepts over the next handful of days, weeks, for you guys to master all of these individual order block types, structure, so on and so forth. That being said, have a great rest of the day, practice, study, and I will see you guys in the next lesson.